Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Marathon Digital, ticker symbol MARA. And so here I am recording this on Saturday, October 12th, after Marathon Digital closed on Friday the 11th at a price of 1608, being up a little over 5.5% on the day, but pulling back about 6 cents in the after hours. And so I wanted to go over the chart because I think it's looking really good. And also, I wanted to go over it because it was kind of inspired by a couple of posts from X. So I wanted to go over those real briefly as well before diving into the chart. And so the first post that I saw was from the Bronx Viking. He was posting about MicroStrategy and how it looks like it has broken out and confirmed, which could be repeating the same kind of pattern that we saw with Super Microcomputer. But since the price of MicroStrategy is over $200 a share, I was thinking about, what are other stocks and or cryptocurrencies that are a little bit cheaper per share or coin that, might have a sympathy play. Just thinking that anything related to crypto is probably going to be going up. Perhaps what will be driving this breakout that we see and move higher. And then I saw this other post from Volatility on Marathon Digital. He goes over that we have, been testing these levels here and that it looks like we could be breaking out from this wedge. And so, I took to my own charting to kind of see if there was anything else that stood out as potentially acting as support if we are to be breaking out of this downtrend. This is effectively the same downtrend that Volatility had drawn, with the high being from July 17th, and then this other pivot high being the high from September 26th. So that's how you get that. And it does look like with the big candle that we saw on Friday, we did test the top of that wedge, but got rejected. And it does look like we are sitting below the 50-day moving average, which is at a price of $16.12. So maybe there is some resistance there, but it does look like we closed above the 21-day moving average, which is at a price of 15.95, I believe. And so, looking good there, but, we do need to be moving a little bit higher, effectively getting a close above Friday's high, which was at $16.23. So if we see a close above that level, that could be serving as confirmation that we're seeing a breakout, and this could be going much higher, potentially to the 200-day moving average at a price of $19.56, which represents a move of about 20% from the closing price on Friday. So looking pretty good there. And so, the analysis that I did was, just basically taking a look at, is there a trend line that could be suggesting we are at support? And so I drew this yellow uptrend, which goes back to the low that was hit on October 6th, so the low of October of last year, of 2023, which was at a price of $7.16. And then the other pivot point is the low that was hit on August 5th of this year, when the markets gapped down, and then we saw a pretty nice bounce there. A big green candle, though, even though trading on the day was down 1.4%, which is kind of surprising seeing such a big green candle, but there was just a really nice bounce. And so I view that trend line as being pretty significant, a pretty important level. And what we can see following August 5th is that we did actually break that uptrend. We got two closes below it, closing on September 5th and 6th below that level. And this is actually very interesting. The first close on the 5th, we got a low on the day of 1374, and following that on September 6th, we got a close lower than 1374 at 1337. So I would expect that to be confirmation of a break of this downtrend, but that was just a fake out. We did then close above that uptrend on September 9th, reclaiming that level, and we have yet to close below it again. So I do think that it is acting as support. We got 3 wicks below it over here between October 1st and 3rd, but no closes below. And then just recently on Thursday, October 10th, we got another wick below, but from that low, we did bounce. So looking really good there. And so I view this as potentially, moving towards breaking out from this wedge, but maybe we get a pullback, a retest of this uptrend before we get that breakout. So something to keep in mind there. And then these other levels that I have drawn here along with this other white uptrend in white that I'll go over in just a minute. So this first line that I have drawn here at $14.67, that is the low from October 10th, the low in this range here. And so I view that as a good stop loss level. I currently don't have a position in Marathon Digital, but if I were to establish one, I would want to have a plan in case the trade goes wrong, if it starts heading down. And I feel like 1467 is an unlikely level to hit, or maybe 1465, somewhere around there, because that was the low here and we have been putting in higher lows. I don't think we'd be hitting that level, but maybe we get a fake out break like we saw over here. And so, that's why I would move the stop loss a little bit lower than 1467, maybe 1465 or 1460. But if that order does get filled, if I do get stopped out, where would I want to re-enter? And so I could view this other low here, that was the low from September 6th, being at a price of $13.17. I could view that as a good level to re-enter if we do break below 1465 or so. And the reason for that is because of this white uptrend. So if I take a step back, we can see where that line originates from, and it actually goes back to the lows of 2022. Going back all the way, back to 2021, the pandemic levels that we were seeing here, these big highs. So this is the low following all of that of $3.11, which was hit on December 28th of 2022. So that is the initial pivot point. And then the other pivot point is the low from October 6th of 2023, the same as the other pivot point here at the low of $7.16. And so I view that as, really like the bottom line. If we do break below this stop loss level here, right around 1465, I could see us finding support at this white uptrend. And so I think that re-entering around $13.17 or maybe $13 could be a nice way to get in if we are not to be breaking out now and instead moving to the bottom of this wedge that is, a little bit bigger picture here than this yellow uptrend that I have drawn here. This uptrend we have not traded below since going back to that low that was hit in 2022 of 311. So, if we do get a rejection as we are sitting below the 50-day moving average, I would look for price to go no lower than $14.60. But if it does, right around $13, I think that could be a great entry for a pretty massive move to the upside. And from $13.17, moving up to that 200-day moving average, that represents a nearly 50% move to the upside. And I think that there is potential for it to go even higher, like to the high that we hit on July 17th, which was at a price of $27.30. So going from $13.17 up to there, that is a more than 100% swing to the upside. So I think that this is a great looking trade, both with risk management in case it does go wrong and a re-entry plan. So, I am really excited about this. I think this looks really good. And aside from Marathon Digital, I'm excited if this means other stocks like MicroStrategy and cryptocurrencies like Bitcoin, Dogecoin. If this means that we're going to be seeing a breakout across the crypto sector, I am pretty excited about that, and I hope you are too. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.